day traders, Raghee here. We're going to take a deep dive into some metals here as we kick off our video update on, what is it that I'm continuing to focus on to the long side in terms of those opportunities in this market. So actually, let's make a quick, I'm going to put some quick notes here together for this video. And it's going to focus on copper, not gold. It's going to focus on looking at Freeport-McMoRan as a proxy to copper. Taking a look at also when it comes to metals, what metals are sensitive to real yields, right? Which is a very different conversation as opposed to what metals are going to benefit from an overall uptrend in the equity markets led by reflation, or even just a reflation narrative that doesn't even necessitate to the Dow moving higher, although some of these metals that I'm talking about are going to be more tethered to industrials and transports. All right, so let me walk you through it rather than sort of explain it, but this is going to be the gist of the video. So we're taking a look at copper here, which is really at the heart of this reflation trade. And this is where I say copper, not gold. We have a double green uptrend that has been in place for many, many months and has really spent very little time acting in a parabolic way, meaning acting in a way where the distance from the wave to price action was a large distance. Because when this distance is very large, that means typically the trade has gone consensus, it's accelerated. It's far more difficult to trade a consensus play than it is something acting a little bit more sane, just sort of surfing the wave, moving higher, surfing the wave, moving higher. That's going to be easy because in the surfing of the wave, the 34-period exponential moving average wave, those windows are going to be ideal for building options positions, building positions when it comes to copper and Freeport-McMoRan, and just waiting for that next move to the upside and then let the market settle down again within the context of the trend and do it all over. All right, and Freeport-McMoRan, except for when the earnings are coming about, will be a great proxy alternative to copper or options on copper futures. All right, so why not gold? Well, gold is a real yield narrative. As the real yield drops, and I'll show you real yields here. This is a really cool chart from the St. Louis Fed. This is Fred data. And take a look at how gold, which is in the red, and this is the 10-year, which is in the blue. Take a look at how generally when one zigs, the other zags. And this is what I mean about understanding where gold is going by watching the longer-term bond yields, 10 or 30, quite frankly. You can also look at real yields through just the 5, 7, 10, 20, 30. This is data from treasury.gov. This is the daily treasury real yield curve. You just want to see whether or not those numbers are dropping. Take a look. Are they dropping or holding steady? I think this is a tougher look at the market. I like this version as well from Quandl, QUANDL.com. So see this dropping? This is what I'm talking about. So let's zoom in. This is what allows gold to rally. So this is probably the easiest way to look at this, or this Fred data, which really shows you the way in which gold and the real yield, this 10-year constant maturity rate, move opposite directions. And here you take a look. Gold is going to do opposite of basically this. So, and here's the 10-year, right? So ultimately what the takeaway is looking at those real yield charts. I've shown you a couple here. Not to geek out on you on this data, but I really want to drive home, and this one probably does it the best. Gold is moving higher, not because of reflation, but because of real yields. And so when I have a setup in copper versus a setup in gold, there is a reality that they both might head up in the same direction. And so if they both possibly will head up in the same direction, it doesn't mean they're correlated to one another. Please don't make that mistake. And it doesn't mean that gold is correlated to some sort of risk aversion. That's not it at all. It's the fact that real yields are dropping, but we also have this reflation trade. Notice that reflation is going to be a copper trade and gold is going to be a real yield trade. And that brings us to other metals. One of the questions I get quite a bit, and we'll dive into this, although it's a little different a conversation, but how about steel? This is a steel ETF. Take a look at the reflation impact in the steel ETF. And so we'll dive into this in the premium video because I love this idea of the metals trades. So we can take a look at steel trades via the SLX, again, reflation. So here it's really reflation versus real yields and what's going to benefit from which. Okay, I hope that helps. I know it can be a little bit of a rabbit hole conversation, but as long as you know what the catalyst is for the movement, for the trends, you'll be able to sort of separate your steel trades, your copper trades from your gold trades or your silver trades. And so in that, you'll have more accurate reasons for the timing of the entry and for the expectation of the follow through. All right, hope that helps. A little bit of a deep dive. Thanks as always for listening. Smash that like button on the way out. And by the way, in the comments, if you have requests for topics that you'd like me to cover, let me know when you see me in the Charts and Coffee show every morning at 9 a.m. here at the Simpler Trading YouTube channel. Or just like I said, leave a comment for requests for upcoming conversations. Would love to see them. And until next time.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me